There's a powerful moment every future millionaire experiences on their journey to financial freedom. It's not when they make their first $10,000. It's not even when they cross $100,000. It's the strange, quiet moment when they open their investment account and see $300,000 staring back at them. At that point, something shifts inside you. You realize you've built real money, serious money, more than most people will ever accumulate in their lifetime. Yet you're still waking up to an alarm, still trading your time for money, still carrying the weight of bills, responsibilities, and daily pressure. And in that moment, a deeper question emerges. If $300,000 doesn't give me freedom, then what actually will? This video is for everyone who is grinding toward $100,000, $200,000, or has just crossed $300,000 and feels strangely unsatisfied. Because here's the truth most investors never see. $300,000 is not the finish line. It is the true starting point of financial freedom. This is where your money finally begins to work as hard as you do, where compounding stops being slow and starts becoming unstoppable, where patience turns into momentum, and momentum turns into wealth that can set you free. If you're tired of feeling stuck despite saving and investing, this is your turning point. Stay with me, because today you're going to discover exactly how to move from just having money to actually building the life-changing wealth and freedom you've been working so hard for.
You open your investment account and see $300,000 staring back at you. Not excitement, not relief, something else. Because on one hand, that's real money. Serious money, more than most people ever manage to invest in their entire lifetime. But on the other hand, it still doesn't feel like freedom. You're not retired. You're not financially independent. You're still waking up early, still going to work, still dealing with deadlines, bills, responsibilities, and the constant pressure of needing income. Your life hasn't dramatically changed, and that's when a quiet thought starts forming in the back of your mind. If $300,000 doesn't change everything, what actually will? Because when you first started investing, numbers like this felt enormous. Back then, even $10,000 felt significant. Seeing $50,000 felt unreal. Crossing $100,000 felt like a massive achievement. But now you're looking at $300,000, and somehow it still feels incomplete. Like you're halfway through something you don't fully understand yet. My name is Peter, and if you're somewhere near $300,000 or working your way toward it, you need to understand something most investors completely miss. Because $300,000 isn't just another milestone. It's the point where the entire dynamic of wealth building begins to change, but only if you recognize what's actually happening. Most people don't. Instead, they believe wealth grows in a straight line. If it took 10 or 15 years of discipline to reach $300,000, then reaching $1 million must simply mean repeating the same process 3 more times. Save more, invest more, wait longer, repeat. That sounds perfectly logical, but it's also completely wrong. Because the journey from $0 to $300,000 and the journey from $300,000 to $1 million are fundamentally different experiences. Up to this point, almost everything came from you. Your work, your discipline, your sacrifices, your ability to delay gratification while other people upgraded their lifestyle. From $0 to $50,000 was brutal. Every contribution felt tiny. You might invest thousands of dollars and barely see the account move. The market might go up 8%, but when your portfolio is small, that barely registers. An entire year of investing could feel like it only moved you forward a few steps. Progress felt painfully slow, sometimes even discouraging. From $50,000 to $100,000, things improved a little. But the reality was still the same. Your paycheck was doing most of the work. Your contributions were still the engine. From $100,000 to $200,000, something interesting finally started happening. The market began contributing something noticeable. Some years your investments might grow by $10,000 or more. That felt encouraging. But even then, you were still doing most of the heavy lifting. Your savings still powered the majority of your progress. You worked, you sacrificed. You stayed disciplined when others weren't. You said no to lifestyle creep. You avoided unnecessary upgrades. You drove the practical car, you skipped expensive purchases. You invested when the market felt uncertain. You invested when the market dropped. You kept going when progress felt slow. And eventually you crossed $200,000, then $250,000. And one day you open your investment account and see $300,000. And strangely, it still doesn't feel dramatic. No fireworks. No sudden sense of financial freedom. Just another number on a screen. But this is exactly where most investors misunderstand what's happening. Because around $300,000, something subtle begins to shift. The math starts changing. For the first time, your money begins working at the same speed you do, sometimes even faster. Let's make that real. Imagine you earn $90,000 a year. You save 20% of your income. That means you're investing about $18,000 every year. That's excellent discipline. Most people never reach that level of consistency. But once you have $300,000 invested, something interesting happens. At a fairly normal 8% annual return, your portfolio produces roughly $24,000 per year, without you working more hours, without negotiating a raise, without switching careers, without doing anything differently. Your money just generated more growth than your annual savings. Think about that for a moment. For years, your financial progress depended almost entirely on your effort, your income, your discipline, your willingness to delay gratification, but now something new is happening. Your wealth is beginning to depend on its own momentum. Your investments are starting to produce results faster than your savings. Your money is beginning to work as hard as you do. And that moment is the real turning point. But here's where it gets confusing. Even though the math has changed, it still doesn't feel dramatic yet. Year 1. Your $300,000 grows to around $324,000. Nice, but not life-changing. Year 2. Maybe $350,000 still feels gradual. Year 3. Around $380,000, progress is real, but it still feels slow. Year 5. Maybe $440,000 or $450,000, you're moving forward, but it doesn't feel explosive. And this is exactly where many investors lose patience, because they expected compounding to feel dramatic. They expected a sudden surge. Instead, it feels boring, predictable, almost underwhelming, but compounding always behaves the same way. It starts quietly, slowly, almost invisibly. Then it accelerates. Then eventually it becomes overwhelming. And what happens next is the part most people never see coming. Because once your portfolio moves beyond $300,000, the curve begins bending upward. The gains start getting larger. The growth begins stacking on top of previous growth. The momentum becomes harder and harder to interrupt. And over time, something remarkable happens. Your portfolio starts growing faster than your effort ever could. But this is also the moment when many investors accidentally sabotage their own progress. Not because they lack discipline, but because reaching $300,000 creates a powerful psychological illusion. After years of restraint, you finally feel like you made it somewhere. You finally feel like you can breathe. You finally feel like you deserve to upgrade your lifestyle. And that's where the real danger begins. Because the biggest threat to compounding at $300,000 isn't market crashes. It isn't inflation. It isn't interest rates. The biggest threat is something much simpler. It's the temptation to interrupt the process right when it's about to accelerate. And most people don't realize they're doing it until years later. Because once you reach $300,000, the biggest risk isn't that you won't save enough. The biggest risk is that you'll interrupt the momentum. Compounding hates interruptions. It depends on one thing more than anything else: time. And once the curve begins bending upward, every interruption becomes more expensive than the last. This is where the psychology of money becomes far more dangerous than the math of investing. Because at $30,000 invested, pulling out a few $1,000s doesn't feel like a big deal. At $100,000, a $10,000 withdrawal feels noticeable but manageable. But at $300,000, the consequences start compounding too. And that's when small decisions quietly turn into very expensive ones. Let's imagine something simple. You've spent years building your portfolio. You saved consistently. You stayed disciplined. You finally reach $300,000 and then the market drops, not permanently. Just a normal correction. maybe 25%. Your $300,000 becomes $225,000. That doesn't feel like theory anymore. That feels like years of work disappearing in a few months. You remember how long it took to build the first $50,000, then the first $100,000, and now it feels like the market erased all that progress overnight. So you do what feels rational. You wait. You sell, you move your money into cash. You tell yourself you'll invest again when things feel safer, but markets don't wait for your emotions to recover. They move faster than your confidence. And by the time you feel comfortable investing again, the market has already recovered. Your portfolio would have returned to $300,000. But instead, you're sitting at $225,000, waiting for the perfect moment. That one emotional decision didn't just cost you money, it cost you momentum. And momentum is the entire engine of compounding, because the real power of compounding isn't just growth. It's continuous growth, growth without interruption, growth that keeps stacking on top of previous gains. Once that chain breaks, the timeline resets. That's why investors who eventually build multi-million-dollar portfolios rarely make dramatic moves. They simply avoid breaking the chain. They stay invested. They keep contributing. They let time do its work. And time, when combined with compounding, becomes incredibly powerful. But there's another shift happening around $300,000 that almost nobody talks about. And it has nothing to do with investing. It has to do with leverage. Up to this point, the most important financial decisions in your life were career decisions. How much you earn, how quickly your income grows, whether you get promoted, whether you negotiate raises. Because when your portfolio is small, your salary matters far more than your investments. A $10,000 raise could dramatically change your financial trajectory. But once you reach $300,000 invested, something subtle changes. Your portfolio starts becoming powerful enough to compete with your income. Let's say your investments return 8% in a year. That's about $24,000 of growth. That's the equivalent of a massive raise. Except you didn't negotiate it. You didn't switch jobs. You didn't work longer hours. Your capital simply did the work, and that's when the real leverage shift happens. Up to this point, your biggest financial lever was earning more. From here forward, your biggest lever becomes investing smarter and staying invested. Your capital starts becoming more powerful than your paycheck, and most people never fully adjust their thinking when this happens. They continue obsessing over salary, while their portfolio quietly becomes the most powerful financial tool they have. But there's one more trap waiting at this level. And it's one of the most destructive mistakes investors make: lifestyle upgrades. For years, you stayed disciplined. You avoided expensive habits. You delayed gratification. You watched friends upgrade their lives while you focused on investing. Now you finally feel like you've earned the reward. So you upgrade. A better car, a bigger house, more expensive habits. You tell yourself it's reasonable, because technically you can afford it. But here's what most people never calculate. Every dollar removed from compounding at $300,000 isn't just a dollar spent. It's a dollar that never multiplies. A $40,000 car isn't just a $40,000 decision. At 8% over 20 years, that's roughly $185,000 of future wealth. A $60,000 purchase could quietly become $280,000 of lost compounding. The cost isn't the purchase itself. The cost is the future momentum you just erased. This is why the people who eventually retire with several $1 million often make a strange decision around this stage. They stay boring. They don't suddenly upgrade their lifestyle. They don't dramatically increase spending. They protect the system they spent years building, because they understand something most people miss. $300,000 isn't the reward, it's the starting engine. The moment when the machine finally begins working. Once that engine starts running, the smartest move isn't to interrupt it, it's to let it run. Because the years immediately after reaching $300,000 are some of the most powerful compounding years you will ever experience. Every year the numbers get bigger. Every year the gains accelerate. And eventually something remarkable happens. Your portfolio begins growing faster than your effort ever could. At that point, your money isn't just working for you, it's outworking you. And that's the moment when wealth building stops feeling like a grind and starts feeling like momentum. But that only happens if the process stays uninterrupted, if you stay invested. If you keep contributing, if you resist the urge to chase shortcuts, because compounding doesn't reward excitement, it rewards patience, it rewards consistency, it rewards time. 20 years from now, when your portfolio has grown into several $1,000,000, when your investments generate more income than your job ever did, you'll realize something surprising. Wealth wasn't built during the years you worked the hardest. It was built during the years when compounding was allowed to run quietly in the background, year after year, uninterrupted. And for many investors, that quiet process truly begins once they reach $300,000. Because from this point forward, every year of patience becomes exponentially more valuable. And once the curve really begins bending upward, compounding stops feeling slow and starts feeling unstoppable. So if you're somewhere on the path to $300,000, remember this. The hardest part isn't reaching it. The hardest part is protecting it long enough for compounding to take over. If this video helped you see money a little differently, make sure to hit the like button so more people can find it. And if you're serious about understanding how wealth actually grows over time, subscribe to the channel. Because on this channel, we break down the psychology and math behind building real financial freedom. Thanks for watching, and I'll see you in the next one.
If this video helped you understand the real power of your $300,000 milestone and inspired you to stay disciplined on your wealth journey, then you're in the perfect place. This channel, Passive Income Plug, is all about building strong passive income streams, mastering compounding, and achieving true financial freedom through smart, long-term investing. If you want more practical videos that show you exactly how to grow your portfolio, protect your momentum, and turn your money into a powerful passive income machine, then do this right now. Like this video, thumbs up, subscribe to the channel, and hit the bell so you never miss new uploads. Keep watching, keep learning, keep compounding. Thanks for watching till the end. Your future financially free self will thank you. I'll see you in the next video.